everybody. Jim Malone, on Dallas trading floor. Hope you're all having a good day today. The market has kind of turned a little bit. It's looking like we might be in a relief rally, and in a relief rally they can be very violent. But they typically are short-lived. So I think we got to be very, very careful about putting on any positions today. It's just difficult because there's a lot of stuff. There's a lot of stuff going on. First of all, the Nasdaq did move up today, as well as the Dow Jones, and the Russell is up as well. So that's a very, very good sign, of what's going on. But I think we got to be super careful in this kind of a market because it's just one of those things. By the way, everybody, if you're watching on TikTok, I'm broadcasting live on YouTube. You can get to that YouTube on all the charts and everything like that by just going to my profile, clicking on the link, and then you'll see a live. You'll see the live feed for YouTube. Just push on that. Let's just go through the numbers right now on the stock market. Basically, the Dow is it's up about 0.67%, which is significant. We do have the S&P up 0.11. That's pretty good. Also, the Nasdaq is up, as again we indicated. So there definitely is sort of kind of a relief rally going on right now. Don't know exactly how long that'll last, but hey, we'll take it. Absolutely, we'll take it. Kind of wanted to show you a very interesting thing. This is something that might be of interest to you, and this is the pattern that you use when you are getting ready to short a stock. Now, obviously, you don't want to short in a relief rally, but what I suspect is going to happen is that the market is going to move up, and then we're going to get an opportunity to short, probably in about 2 weeks. And I just wanted to show you this. This actually came out of the Investor Business Daily today. I think it's a really, really good chart, and I wanted to bring it to your attention. Basically, this is the head and shoulders pattern. And let's click on over here. And this basically what this shows you is that when a stock tops, now, because we've been in a pullback for so long, there's not going to be as many opportunities for this kind of a pattern because the market did top. Really, the best time to have shorted was about 3 months ago. So now is not a great time to short a stock, but I want to show you the setup here because I think it's very significant in terms of just in terms of everything. Basically, what happens is you need to set your charting software with a 10-week moving average line, and basically what happens is as the stock moves up, it will move above that 10-week line, and then it will eventually peak. Now it has typically a lower it has a little bit lower left shoulder than a right shoulder, though that could vary, and then a top. So you want to see it come up, sort of gather a little bit, and then go to the top on the head, and then come down, and then the shoulder, and then basically where you're really interested in coming in, of course, is that entry point where it's coming off of that 10-day line. Now, it typically will give you another opportunity, will rally to that 10-day line, and that's really the first good place to short. Now, if you don't have that capability, then you might be able to get it as it rallies to the 10-day line. Let me kind of let's see if I can put on CRISPR. Let's see if I can put something on. Well, Dexicom. That would be the right one. All right. So that kind of gives you an idea. Here's I did take a position in the stocks today with a half a position in EVH, and I'll pull over to that chart just in a second. So let's take a live chart. Let's take a look at the live chart for EVH. It should make me a little bit of little bit of a lag here on my system. There we go. All right, so now I can show you kind of the live chart on EVH. There we go. It's not letting me move over there. Oh, come on. All right. Hopefully we can share the screen. All right, having a little bit of difficulty there sharing the screen. So share screen, there we go. Sometimes it's a little bit difficult. I'm working from home today, so my bandwidth is a little bit lower than normal. Here's what happened. Buy point, and then it pulled back. It did close up, so I'm kind of confident. Now I only took 25% of the portfolio, and I did purchase it at about 34.30. It is off a little bit from that. So it closed at 33.41, and it's up after hours 33.60. Now, what I do like about this one is this volume this volume that did come in here, right? And the volume was significant, and it did move above that. Above that line. So we will see. I did set the stop loss fairly tight at 31.95. So that's right here, as you can see. Let me show you that right there. It's 31.95. There we go. 31.95, right about there, and that's really at the bottom of that's at the very bottom of yesterday's rally. So you want to put it right below there. That's a very tight stop loss. If it is not able to hold on to this gain, then then we will be able to then we'll get stopped out. But that does look fairly good. I have another one kind of on the radar screen. I haven't bought this one yet. It's called CRISPR. I am starting to just kind of put my little toe into the water. This one is interesting. This has come up quite a bit. And it is looking fairly good. But I have not bought this one yet. If I did buy this one, it would be in a very small amount. Now, one of the things that you can definitely see a theme here, and that is that most everything is in the medical sector. That seems to be the sector that is doing the best. Oil has been moving lower. The medical sector is the best. Now, this is, of course, a gene editing company, and this has seen some pretty good runs. It is finally moved above the 200-day moving average, and it does have a 79 relative strength with an increase in the relative strength line. When you're looking at in these areas, the most important line is this relative strength line, also known as, got a lot of volume coming in here. So there definitely some institutional accumulation going on here. And hopefully that will be good. Now, I'm looking at this one that's on my watch list. I have not bought this one yet. I'm looking to possibly buy this one tomorrow if it can hold above this line here. Basically, this is a gene editing company. We're starting to see it turn, I believe. So I am getting interested in it. I'm not going to take a large position in it. It was up tremendously today, up $14. It's pulling back a little bit afterwards, but it's still up. So I do think that there is some institutional interest here, and we don't really have a very good buy point on this one. I wish we did. I wish we had a buy point, but it is above the 200-day moving average. That's key. We do have a upward trending relative strength line, and we do have a lot of strength coming in. It does look like that we do have some funds coming in here. Currently funds are 48% of the stock, so it's significant. We also have they did move lower, but they're starting to stabilize, and I do believe we're going to start to see some more funds come into the stock. This one of the reasons this stock also is potentially a buy is because they do sort of have a revolutionary gene editing technology. It's the CRISPR technology that allows genes to be edited. So that is a significant, that is quite significant. Currently, just going back to my portfolio, I'm basically all in cash with the exception of EVH, and of course this is also in the health area, a very small position, 6.25 or a half a position. Now, what do I mean by a position? Well, if you were to take this as a pizza, divide it up into 8 slices, each slice would be 1 full position. Currently, I only have a half position, so I have basically 1/16 of my portfolio deployed to this. The rest is all cash. So basically, let's get to the questions. Thanks for holding here. Yeah, so there we go. All right, let's see. Let's keep first question. Thank you so much for holding on here, everybody. Let's see. Hi, everyone. So, thank you so very much. Thank you. Of course, this is, I put this up myself, so thank you for that. All right, PG. Let's look at PG. Let's see if I can get that up here for everyone. Procter & Gamble. This is a very much of a safety stock, and good stock. Always been a good payer. Looks like it's in a double bottom pattern, which can be a very, very, very good pattern here. Would I buy it here? Well, I would be careful about buying Procter & Gamble here, only because Procter & Gamble is below the 200-day line. I just don't like to buy anything below the 200-day line. That's kind of what William O'Neill said many years ago. Nothing really good happens below that 200-day line. So I'm a little bit reticent, even though this is a great company. Here's another thing that I want to point out that I don't like on this. We have a relative strength line. It was making a nice move up. The relative strength line was making a very nice move up, but it has since moved in the wrong direction. So the problem with this is, of course, it's gone down just like the double bottom. It's come back up here again, but it's starting to pull back. So I would not look at this one as a potential buy just because of that relative strength. We have the relative strength is declining with regards to the S&P 500. So the S&P 500 is going up, and the Procter & Gamble, which has been a very good stock, is pulling down. So I would not recommend buying Procter & Gamble at this area. I wouldn't just because it just doesn't. Oops, come on. Sorry about this. A little bit of a technical difficulty here. Let's hide that. Well, let me hide. I'm having my system is relatively slow, so I've got to be a little bit careful on that. So PG is not a buy here. So that's really kind of what I've got to say. It's really not a buy at this level. We have a declining relative strength line, so I would have to pass on P&G. I would have to pass on P&G at this level. Let's see if I get to that. Okay. So let's go to the next question. Thank you for that. Right. And for Matt, let's look at ABBV. And we're really out of the oils because of the pricing. So we don't really have those to work on. Really, right now, the best areas of the market are in the medical. That's definitely the case here with pharma. This is actually not a bad looking chart. It's in a consolidation between here and here. If we draw a reversal line on it, it's definitely moved above that reversal line, but it seems to be getting a little bit of a It's looking to move higher. One thing I do like about this is it does have a very strong relative strength line, but that is starting to move lower. So here's the thing. I would watch this one. I probably would not be a buyer of ADV at this level, just because I don't think it's making the right kind of move here. One stock that you might want to look at instead of that would be McKesson, MCK, and that stock is looking probably a little bit better than ADV. It's a more expensive stock, of course, but this is the #1 drug distributor in the world, and so this one does have some very nice, a very nice look. And when it comes to that, it definitely does have a very good look. Now it has been pulling back. It's been staying right at the 50-day moving average. The question is, will it move higher? Well, it does have a relative strength line that's moving down, but it is a 98 relative strength. So basically in the top 2% of all the stocks out there. So if you're looking for something, that might be a possibility there as well. So looking kind of good, there. Lisa asks, how long have you been following Can Slim? Is it better to buy low and sell higher, or buy high and sell higher? Well, I believe it's better to buy high and sell higher. I first was introduced to Can Slim back in, believe it or not, 1984, a long time ago. Back then I was just kind of learning, and I came across this book, How to Make Money in Stocks and Winning System, Good Times Are Bad. I actually was working for a gentleman who was a spread trader on options on the Spider, and I was just amazed how he, seemingly week after week, month after month, made money. And I found out that it was largely due to Can Slim trading. So if you're interested in that, learning more about it, the best thing to do is to buy the book, How to Make Money in Stocks and Winning System, Good Times or Bad. Now, you can get this through Amazon, or if you have a half-price books in your neighborhood, that's also a very good thing. And really, you really have to read this thing. It's not a very long book, but if you read it several times, you're going to come up with some good stuff here. So that's what I really recommend. That's sort of the primer for Can Slim trading. All right. Look at that. Hello, Jim. Thank you for your thoughts on EVH. This is the one I did buy this morning. By the way, this I am starting to put my little toe back into the water. Not by very much, I'm telling you. It's been very, very tough to find anything that really, that really is working. This one I did buy this one. I don't, unfortunately, this has kind of gotten to the point where I'm not so sure. I put in a very tight stop loss on this one, and it is up after hours. It pulled back initially today. I bought it. I bought it a little bit too high. I bought it at 34. I bought it at 34.30, and then it pulled back a little bit, and then now it's starting to strengthen. So it does look like it's going to. This one does look like it's going to. It's going to stick here at about 33.14. Now, interestingly enough, this is interesting because even though this is in the health area, this is really a tech company, and I definitely, in buying stocks, I definitely like to be in that tech area, and so this one I do like. Now let's kind of run through some things on this one just to kind of look. We do have a very nice increasing fund ownership on this one. The fund ownership on this one has gone, it currently is about 408. 408 funds are in this very nicely. So we have some good funds ownership. And 79% of this company is owned by funds. So that is very, very significant. That's something that you definitely want to look at here. Now, because this is a growth company, as you can see, it's not, it's still kind of making its way. But I do believe that we're going to see this one move much nicer. So let's see if I can give you and I have to move this over because I blocked part of my screen with my, there we go. So basically what's happening here is that on the sales, we've started to see some sales move very nicely for this company. They're up, sales are up 38%. It's starting to make its move and there seems to be some accumulation of the stock. I mean, who will tell? This is fairly speculative, even though the stock has been around for a while. This is a fairly speculative company, so we can't totally, there we go. We can't totally be sure on this one, but that's one of the reasons why I did go in with a very, very small position. Only basically, my position size very, very small on this at only a half position size, so only 6%. Sometime there we go. Okay, so see there we go. Okay, so maybe we can go back here. Oh, there we go. All right, so I had all kinds of things going on there. So let's take a question from TikTok. Thank you very, very much. Let's see if I can get a good. What's North European Royalty Trust? Okay, well, we could definitely take a look at some some oil stocks. Let's do that really quickly. And this is a question coming from TikTok. The symbol on this one is NRT, and this is a stock that is royalty trust. Now, here's the thing about this one. It just like the price of oil. This is very, this is very similar to. Oh, there we go. This is very similar to the rest of the oil price. We did come down. We did pull below the 50-day moving average, and we do have a relative strength line that is pointing down. Here's the thing about this one. This is called the North European Oil Royalty. This is a royalty trust. So basically, it's already producing, and this is very dependent on terms of the price of the oil. So good way to collect some dividends. It's moved down to, it's currently trading 1266 on a weekly basis. Let's go to the daily chart. I want to look at the daily chart on this one to take a look. It looks like it's bounced nicely off of the 200-day moving average, and it does look like the relative strength line is moving up. So that is indeed a very, very good thing to be happening here. Now, these royalty trusts are very, very highly rated. Currently, it's 2 out of 197, so that's looking very good. One thing that does concern me a little bit on this one is the fact that we have the relative strength line is just moving lower, and I don't like that, especially in this market, because I do believe we're going to get a pullback in about 2 weeks. But right now we're on this upward trend, so the relative strength line here is pulling down. So I probably would skip this one based on that fact, because it just doesn't give us enough. It just doesn't give us enough runway here. So I would be a little bit careful on that one right now, and it's just just one of those things. All right, we looked at P&G. All right, let's see if we can down here a little bit. Okay. Oh, Roman has a lot of different symbols. Let's look at them. Let's look at NVIDIA first. Of course, this was the absolute. I did very well in this one, but 6 months ago, so not currently. Currently, the problem with NVIDIA is that we're in this downward trend, and just looking at the relative strength line here, it's just not something that I would probably buy at this point. This is the blue line here, and it looks like we're moving down. Now, we did a little bit of an uptick here, but I just think it's too early. I just think it's too early for NVIDIA. I mean, I definitely like the stock, but I just think it's just not ready. So for NVIDIA, I think we've just got to be. I just think we have to wait. Unfortunately, on it. So for NVIDIA, it's in a downward trend, and it has a low RS, relative strength. So that's definitely something that does concern me a little bit about this with NVIDIA. I probably would not be a buyer here because I have a relative strength line that's moving down. It's below the 200, the 50, the 21, and the 10-day line. It's moving like it's rallying up to the 10-day line, but I just don't think you can buy this one. So I just don't think right now NVIDIA is at a place that we could do anything there, unfortunately. So I would say pass on NVIDIA for now. I think pass on NVIDIA for now. Roman also wants us to take a look at Micron MU. You know, and I wish we would get some recovery in the semis, but it just is not looking good for the semis right now. This one, again, we did rally to the 21-day line, which I like, but you know, this relative strength line, I don't want to buy something right now that's I just don't want to buy something that is trending like this. It just doesn't look good to me. The fact that we have a downward trend on that on the relative strength line. Now it did kind of reverse and move up to about 30, but still this line is and we are starting to get some action down here. But the most important characteristic of a stock is how it's doing against other stocks. And currently Micron is moving lower against the S&P, so I can't see it here, unfortunately. It's just just not a great deal. All right, talking about a weak stock, let's look at SoFi. Of course, this is the internet-based lending platform, which, you know, I think the problem here, of course, even though it did get this upgrade, I think this is a dead cat bounce. We're looking at the night chart. Really, to see this, we're going to have to go to the weekly chart. Let's take a look at the weekly. You know, this is a terrible chart all the way around. I did draw that trend line up there, and this is not good. The relative strength line, again, that's this blue line, just not looking good. It's just not looking good. It's moving lower, so that's not good. Even though the S&P is going down as well, this is the S&P 500, and against this it's not good. So I just think you can't get excited about this. This is you know, this is not a good chart for SoFi. So I think you're going to have to, you know, I think you're just going to have to skip it for now. So here's what I would do. You know, no buy on SoFi. No buy on SoFi. So yeah, that's kind of. I just don't think you can buy this. You know, it's $6.19. It was $6.26 today. But you know what? This could be $3 in 3 weeks. This has lost. This has lost a lot of its value. Basically, this has lost over 80% of its value. So I just don't think you can buy this one. You know, I wish I could be more. You know, I wish I could be more. You know, more. More encouraging, but I just don't think you can buy SoFi. It doesn't look good. MRK. Actually, the one Merck is looking good. This is a good stock. This is also one of the drug stocks. MRK. This is where the strength in the market is currently. It's in the drug stocks, and I do like this relative strength of Merck. Take a look at this. It's moving in the right direction. You see, it's moving up. See how that see that relative strength line? That's really, really important. It's moved from 60 basically at the beginning of the year to 80. So that's very significant. It's very near a buy point on a flat base. There is a buy point in this in 94.92. So you definitely could. You know, this is actionable potentially. So 94.92 is the buy point for MRK, and this is Merck, and this is a quality stock. This is a quality stock. So the only problem is the market. I mean, I wish the market were stronger, but this is a buy. You could definitely buy this here. We're in this kind of, we've got a nice base going on here. We're looking at the weekly chart, by the way. You know, right now, you're going to best look at these weekly charts because this is going to give us a better trend. But this is not looking bad here. Let's kind of zoom out to the 25,000 foot level and take a look. As you can see, Merck is at almost its all-time near high. And what I'm doing is I'm looking at the monthly chart here. This is kind of more of a long-term play, and this is looking very strong. I mean, this is looking very, very strong. The relative strength line, very, very strong here, 95 in an upward trend. This is a good area. This has got a 100% checklist. So I definitely think you're onto something here, Matt. This is a quality stock, and this is something that in an environment like this is kind of a stock that you might want to be looking at buying. So I'm actually going to put this down on my list of stocks, MRK, and this one is looking very, very good potentially. So I definitely like this one. Thanks for bringing it to everyone's attention. I'm going to go back to the weekly chart here. I'm going to give you a look-see there. It's a little bit more. It's a little bit more. This is a little bit more noisy chart, but again, it's very nice uptrend in the relative strength line. So that's looking very good. Earnings are in 21 days, so there is some risk there, but basically looking pretty darn good in terms of that. All right, so definitely MRK, definitely one that you can definitely look on that. All right, let's look at finance fund. Should I keep holding UL for dividends? Good question. At the bottom. Okay, let's take a look at UL. Here's the thing. Here's my reticence on holding it, and that really has to do with the fact that yes, the earnings are good on Unilever, but I just don't want to risk it. I really don't want to risk it. If you'll notice, we're in a sales decline here. We're in a sales decline for Unilever. So here's what I would do. I know that it's in 19 days. I would consider selling this before earnings. Part of the reason I would consider getting out of this one is because, we could have disappoint here. Now, there are several things that I like about this, so I'm not trying to be negative here, but the overall trend of the stock is downward. But the relative strength line, and this is what's key, is moving up. So against the S&P 500, Unilever is improving, but it isn't a downward trend. The question is has it turned the corner? Is it moving higher? I'm not convinced of that. So my guess on this one would be to sell it. I think you need to sell it. And by the way, thank you for putting it out there. Please, please, please hit the like button on this if you can. It really does help us. So hit the like button. I do appreciate that very, very much. All right, let's go to the next question. We are Snowflake. All right, Snowflake. Yeah, this is one that I have a short on. I have a short on Snowflake. I may get skunked on this one. I do think this one's going lower. I have a bear put spread on Snowflake, and it has not been doing as well as I would have liked. That's for sure. Let's look at Snowflake. This is the chart of Snowflake. It looks like it may have turned the corner. Looking at the weekly chart, the relative strength line is moving up. Currently, it's a 17 relative strength, which is not the greatest. Yeah, it sort of looks like it may have turned the corner here, but it's off after hours. I do have a short on this one. I think it's gonna. You think it's maybe moving lower. Part of the reason I'm thinking this. Now, the relative strength line is moving up, so that is a good thing. But it's only 17. So what do I think about this one? Well, I think it's too early. I actually have shorted this one, thinking that we had this head here, yeah, and this was the left shoulder, and then there's the right shoulder over here. So that's kind of how it. My pen isn't working as well as I'd like it to work. So I probably shorted this too late. I was thinking that we're going to get a bounce to the here, but I do think that we're going to see this thing move lower. That's my guess. I do have a short on this one, so that's my overall opinion of it. So I would be very careful. I would be very careful with anything here on that. So I wouldn't buy this long. I wouldn't buy it short. I did short it, but it probably was not the best thing to do, unfortunately. Do you like a diagonal spread trade? Well, yeah, I actually like these. I definitely like this. I definitely like this. I definitely like this strategy. I think it's a very good strategy, by the way. But right now it's tough. I mean, I've mostly been concentrating right now in this market in bear put spreads. That's mostly been where I've been going, and I haven't been doing quite as well as I definitely would like to. Let's look at these two other ones. These are two interesting ones. I want to look at Ollie's basement. Ollie's Bargain Warehouse. This one is a great stock, and I should have been in on this one earlier. I knew about it. I've traded this one before, and it's looking very, very good. And the question is, can we get in at this level? Well, I don't know. Let's go to the weekly chart to see if there's any possible entry. By the way, when you're looking at charts, I always like to look at the weekly chart first and then zoom in to the daily chart to see if there's any good entry points. Unfortunately, for me anyways, now we do have a gentleman in the Discord room that did buy it correctly. Congratulations, by the way. I wish I had done this. It does look like this is too extended. I wish that this wasn't the case, but we had this very nice cup stage one. The correct buy point on this one was 55, and so if you were to buy this now, you would be buying an extended. Unfortunately, I think you have to. I think in this kind of market, you have to buy very close to the pivot, potentially below it, but very close to the pivot. It's just it's very unforgiving, and that's kind of that's kind of the long and the short of it. So I like this stock. I wish I had bought the stock, but I think right now Ollie's is extended, and I wish I could give you better news than that, but OLLI is extended. And it's just, unfortunately, it's just a danger of buying extended stocks in this market, because you just risk them pulling back and pulling lower. So if we go over to the daily chart on Ollie's, you can see this more clearly. But we had this very, very nice cut base here. 55.22 was the entry point. It just moved. It like it so often does with an entry, it moves up into the pivot, pulls back, and then it moves up, and it just looks like it's going to go a lot higher. Very, very nice relative strength line. Currently, this is in the retail variety store. This has been moving up 32 out of 197. So this is not a bad area in the market right now. But you have to be a little bit careful here with this. So that's my view on that. So Ollie's great stock. If you got into it, I wouldn't buy it here. It's extended, and it's just the kind of thing you can't really do. All right, for Lisa, let's take a look at the spider and the Qs. Let's take a look at the spider first. I still don't think this market is bottomed by a long shot. I do think we're going to get another leg down. We're currently in a relief rally, I believe. And as you can see, it's kind of come down, and then this is my reversal line. I do believe, based on this, that we're going to see a bounce on the S&P, and it's going to be basically, let's see if we can do it. I believe it's going to be right about 395. So currently we're at 388. We're moving up, and I do believe that we're going to get a bounce right about here. This is where I think we're going to get a bounce on this. So we are in a dead cat bounce. see the cat? It was thrown to the floor, and then it's pushing up. So I do think that we're going to see it reverse. The spider is going to reverse at about 395. That's kind of what I'm, that's kind of what I'm looking at in terms of of where it's at. So so I would say 395 is the reversal for the spider, SPY. And so that's kind of where I see it being, where I see it kind of losing this upward trend. We do have some nice we do have some nice volume coming in here, but it's dropping off, meaning that even though it's going higher, there are fewer buyers. Now, if this was different, if this volume was going up and it was going up, then I would say, we're looking at possibly moving up, and it might be a good buy point. But right now, I think that it's going to move up to about the 395 level. I believe it's going to reverse there based on the chart, and then move lower. So that's kind of what I'm looking at right now. So right now, we're at 388. I think it's going to go to 395, and then so I think we're going to see the reversal on the spider. Let's look at the QQQ, and of course, this is where all the Nasdaq. This is the Nasdaq stock. It's Nasdaq 100 QQQ. This in an upward trending market. This is a great market. Same kind of situation is going on with the spider. This one is sort of coming up to a reversal line. Let's see if I can. I'm going to delete that. What I'm going to do is I'm going to draw a reversal line in here. We're going to start basically at the top. We're going to move down here. And this one has a little bit further to come, possibly. Well, actually, this is probably the better reversal line. Yeah, it's really the better reversal line here. Settle on that line now. Okay. So I do believe that we have basically moved beyond the reversal line, and we are moving up. But I think this is going to be a short-lived rally. So I'd be a little bit unusual. Okay, let's take the last question for today. That's Palantir, PLTR. I did have a position in this one. I do think that when the market reverses, this could be a very good one. It's got a lot of institutional support, but it's trading at $10, and that is not a good sign. That is not a good sign. This is the reversal line that's coming down here. We're way below that. It is moving up. We do have a relative strength line that's moving up, and the S&P 500 kind of it is still in a downward trend. So against the S&P 500, this is moving up. So you possibly, I just wouldn't take a position here just because for a lot of reasons. It's below that 50-day moving average. It's below just above the. It's below the 200, excuse me, and it's above the 50. But I wouldn't take a position here. I think this is bottom fishing. I mean, some people are great at bottom fishing. I just couldn't. I want to see a stock that's proven itself more than this. I think this may be a great buy in the future, but I would pass on PLTR. I would pass on PLTR. But we do have some stocks that are actionable, so it's not all doom and gloom. One of the stocks that I do think is actionable right now, of course, is McKesson, MCK. Merck is definitely Merck, MRK is actionable. MRK. This, of course, is the huge pharma company. I do think this one is actionable at this level. So this one is actionable right now. It's not Palantir. So, oops, it's not letting me hide this. So, so basically, let's see if we can get this one up. So, on Merck, there we go. Not letting me do it. All right, so we do have a buy point on Merck at 94.92. That's the top of that blue zone. So we're below it right now. We're below it a little bit, but we're in the buy zone currently. So this one is actionable. Merck is currently actionable right now. So that is one that I think you could definitely look at. MRK is actionable. And it's actionable now. This is not a hugely exciting, fast-moving stock, but it's profitable. It's got a good pattern, and it is actionable right now. That's one to look at. I'm also interested in CRISPR. Now and that's this is not as good, but right now Merck is actionable. So this is kind of where you want to, I think, be in the market, is in some of these drug stocks. And I've just started moving back into the market. I also have EVH. I think this is a little extended. Let me just see if we can do anything with EVH here. This is the one I did buy this morning. I bought this one. Let's look at how that came out. EVH. See kind of what's going on here. Yeah. Okay. So it's up after hours. This is still actionable as well right now. EVA. This one is actionable. EVH. Let's see, put it in there. EVH. And that one is also actionable. So really not, I'm kind of putting my toe into the water here. I'm putting my toe in the water. Merck and EVH I like. And then also you might want to look at McKesson as well. But really, really thin. Right now, the semis are not good. I really probably would be waiting on the oils. But if you want something, this is probably where to go. Okay, well, thank you very much, everybody. Let's see, for everything. Oh, my God. And G says, this is true. Google could be a very good buy into the split. Typically what will happen, here's the thing about splits. In my experience, stocks will appreciate into the split, and then after the split, that's when they typically will fall a little bit. So if you're interested in doing the Google split, and this should change here in just a second, I'm hoping. There we go, Alphabet. That might be something. Now, here's the problem with Alphabet right now. It's very far below that 200-day line. This is a strong stock. They have pricing power. But if you want to buy it, the time to buy it probably is before the split. So I think their split is on the 31st of July. I have to check that. Can't remember right offhand if that is the case. But so we're coming up on it pretty quickly. You don't want to hold it through the split typically. Your best bet is to buy it into the split, and then it should appreciate into the split. And then after the split, it typically will pull lower. So that's definitely from G. That's a great thing that you put up there. Okay, all right, everybody. I'll be back with the Alice Trading Floor. And everybody, if you could like the show, I really appreciate it. That helps us so much. And until tomorrow at 5, happy trading.